Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day recap for Wednesday, January 27th. Well, another action-packed day. Certainly not dull in the markets. A few things to go over for the day. So let's talk about performance first. I'll talk about how I kind of tackled the day and my strategy for the day and what I've been, how I've been kind of trading this and making some good moves and a couple bad moves. But, at the end of the day, all in all, I think, you kind of live to fight through these types of things. But let's talk about the performance first. S&P down 2.4% for the day. Q's down 2.8% for the day. Small caps also down, but not as much. They were down 1.8% for the day. Gold, silver, not really much of an issue. Bonds, not really much of an issue. Here's where the standout, sticking out like a sore thumb, I should say. Sorry, lost for words there. VIX up 61%. And I guess I should have some loss for words for that. That's a huge move. So let's deconstruct some of the day's moves, right? So there's your big green bar in the VIX. So this was day 4 of the short squeeze, right? We really start. As I've been saying this week, there's been short squeezes going on now since last March, but really this kind of picked up and escalated on Friday, and then we've been seeing it basically every day thereafter. In my opinion, you could disagree with me here, that's fine, but the damage that this caused of trying to blow up a couple of hedge funds far outweighed the costs. And I think it's kind of like, I don't know. Am I meaning anything bad here when, smaller investors, younger investors, maybe making a lot of money on GameStop and AMC, but, maybe talking to their parents, and saying, hey, I made $5,000 or $10,000, and their parents saying, oh, great. Well, my 401k is down like $30,000 today. So, these things do not come at the expense of nothing. The reason why, and what I've been talking about the last couple days, is that this is not a zero-sum game. You can't just say we're here to take money back from the hedge funds. They've been doing a disservice. Yes, that is, partly true that there are some bad players out there and things have gone on that shouldn't be for a number of years, but you can't just take one from the other. It's not a zero-sum game. So for instance, what we've really seen the last couple of days is those hedge funds who have gotten beaten up, they have to cover their shorts and they're selling some of their longs. So I think that is one of the issues that we experienced today and why the market got hit so hard is because, again, these things, a couple of hedge funds getting blown up, they have to sell some of their long positions. And the way that this market moves these days, comparatively to other years, high frequency shops front run the sell orders, and they make these moves quite drastic. And I think that's a lot of that's my feeling for what we've seen. I knew that, I could kind of sense earlier in the week on Monday, if you listen to my video and I took down a number of positions on Monday, I just didn't think that this was going to go, untouched with the rest of the market. I didn't quite figure it out altogether on Monday, but I knew that this was going to cause some big volatility, and that's kind of what we have here. So the outperformers for the day, of course, was retail. Where's retail? Up 12% for the day, right? So congrats. You got all these short squeezes to work. But however, again, look at the damage. SMH down 5% for the day. So the semis, right? I keep hearing about, there's such a fan base for Cathie Wood. Well, look at what happened to her funds, right? And we talked about that in yesterday's video. This ARK-G is down 4.3%. ARK Innovation was down 2.5%. I mean, that's now a significant slide. So now the positive about this is you've got some names that are now dipping. So if you're in the right position for this, you could start to kind of, as I've been kind of advocating over the last couple of weeks, when these dips occur, you want to be able to play a little bit more offense than defense, right? I was doing a little bit of both today. So I mentioned that I took off a bunch of positions on Monday. Well, I added a couple positions back. All of those positions basically did not do well. Here's the trade blotter, right? I always show all the positions regardless of what happens. But one of the things that I said this morning was I'll come back to the trades. I do want to go over some of the trades of the day, but let's talk about where we are in terms of index levels. When I mentioned yesterday, I said, watch this 3862 is going to be the resistance. Clearly, I mentioned the word I used in yesterday's videos was that this is sticky up here, and we could not get through that, right? And that was a little bit of a tell, right? So that's 3862. Once we broke this 3800, which is where we were sitting at pre-market, and what I went over today in the TTG pre-market session was that I really wanted to see if there was going to be the buy the dip attitude, or if there was going to be more breakdown, because of all these short squeezes and funds having to liquidate longs due to that. And I think it was a little bit of the former and a lot of the latter, right? So we had some opportunities, and that's basically how I set today up. Is I was more of a scalper than anything else. So if you go to some of these trades, I'm going to bring up a 5-minute chart to an S&P, but I bought a little bit of ARC, right? Right about 15-20 minutes, because again, it was very difficult with these trading systems. They're maxed out, right? I understand there's a lot of frustration about the trading systems, but this is off the charts volume, right? It is not. I would say it's while I get frustrated too, it's really not their fault that the volume is 10 times higher than normal in some of these names, right? They just don't have the capacity, the systems for that. I know from trading institutionally, our systems would get maxed out too when there would be heavy volatility. It's just systems could only take so much pressure and so much volume. When everybody's trying to do all this, a lot of things at the same exact time. So that's what also makes it a dangerous environment, is that you can't execute trades. And to me, that's a risk, right? If you can't execute trades for 20 minutes after the open, what should that tell you to do? Add more risk or add less risk with that risk? You could be the judge of that. But yes, I tried, once I got a footing and the systems were back up, I tried scalping. This worked, the ARC worked, but I was very quick, right? Out 141, 137. Crowd I got into for this morning, again, just a scalp, out of crowd, 206 paid 200. DraftKings took a small profit and got out. Chewy took a small profit and got out. I wasn't looking for home runs today with this volatility. I was looking for singles and doubles. A lot of singles and doubles. Unfortunately, on a couple trades, right? I took the stop on this one. It started to kind of perk back up. I bought it again and got stopped out again. So, like I said, I had some really good trades. A couple of them didn't work. CELH I thought was kind of holding on for the day. Once it broke very quickly, right? If we go to the 1 hour on this, you could see I was kind of seeing if this thing could kind of hold this 200 period moving average. Once it broke quickly, and I had to sell that $5 down or $4 down, whatever. So probably that one cost me some money. So probably I should have traded that one in smaller size. Hindsight 2020, but. You kind of have to continue to kind of adapt to these market conditions. All right, so that's some of my thoughts for the day. Another thing why I talked about just being a scalper in this environment, because we know based on what yesterday, when we looked at the advanced decline line, when I looked at things like the McClellan oscillator, right, or summation index, excuse me, right? Right? So this is market breadth, if you're not familiar with NYSE, right? So it's a measure of market breadth, advancing versus declining issues. So when you have expansion, when more names are advancing than declining, the analogy that I use that I've learned from a trader at Tribeca Trade Group is that the wind is at your back, right? When we have this, right, when there's more declining names versus advancing, you have contraction, right, and the wind is in your face, right? What do I do when the wind is in my face? I try to limit swing trading. And I didn't really know, I got, like I said, I got caught in a couple swing trades because this really didn't. This updates once a day, so I don't have the new data point for this. At least I don't think I do. I think this updates sometime around this evening. No, this is not updated. But so this could have went either way, and it went the wrong way for me. So for a couple longs. So that's kind of the analogy that I use. So I think day trading, scalping, is what I will continue to do until we kind of see, where this VIX wants to go and how much more volatility we're going to get, right? This closing on the absolute high tells me that we may not be out of the woods. We may not be, right? We're up to 37 closed on the highs of the day. I just learned to kind of get out of the way when this happens, right? Protect your money, capital protection, now that we have this. And I'm in my trading account, I'm in about 90% cash right now, right? So I went earlier in the week on Monday to about 70 to 80% cash. I added back, like I said, a couple positions yesterday, and those positions kind of got run over. So I'm in 90% cash, and we'll see how this shakes out. And I don't mind at this point seeing a little bit more. If these short squeezes want to continue, we're going to hear about more hedge funds being blown up because of this. We'll see how much more that they have to liquidate, right? And that forced liquidation could make for a good buying opportunity. But we don't know if that's tomorrow, if that could be done today, or if it's tomorrow, or if it's next week. And I think that's the kind of structure that you have to think about, that the market is bigger than us, right? That's another thing that I hear about some of these message boards, that some of these newer traders think that they can control the market. You can't control the market. The market is bigger than you. And if you haven't learned this by now, you're going to have a rude awakening. The last thing I'll say about this, which is kind of captivating everybody, is that it is great to have new traders in the market and to be excited about the market. But the vengeance and this type of angry behavior is, I don't think, not how I trade. And I hope that a lot of people do not get that attitude. This is the greatest, I think the greatest job in the world, but to abuse it, I think, is where it becomes not as much fun, right? And trading should not be fun all the time. Sometimes it is, sometimes it's not. It should not be fun. It's a job. And we'll see where this goes. But I just personally, that type of behavior of trying to go out and hurt somebody, has gone on for a while. Now, the other thing that I'll say too, which I talked about in the trading room today, in our Q&A session at 1:00, is two wrongs do not make a right. I don't care what this hedge fund did or what the institutional crowd did that was bad. If you're doing something bad too, that doesn't make it right, right? And I have a problem with anybody who comes on CNBC and pumps option flow and talks about how great it is and moves the market. That shouldn't go on. It shouldn't go on with what hedge funds have been doing for years. But also, if the retail crowd is going to do that type of thing too, then that does not make a right. So that's what I would kind of urge people do, is to try to trade the right way. And like I said, this is a great full-time job to have. It really is a wonderful thing to be able to do. But trying to run people over and with this type of attitude, I could tell you, I've seen people who have tried to do this over the years. They come and go. and as well as the super greedy and super victory laps, right? These guys are flashes in the pan. They don't work out over time. So, you could go down that road of being like that, but I could tell you, you're not going to last. And I've been doing this for before 2000, right? I hate to age myself on these videos, but so that's that. Again, I will always give you my opinion. For now, I'm going to sit low a little bit and watch how this shakes out, and I hope for some good opportunities, in the next couple days to a couple weeks, because I think that there will be. All right, guys, have a great night. See you tomorrow.